right, good morning, traders. This is your daily trade analysis from SeasonalSwingTrader.com. Today is Wednesday, January 18th, 2017, and we're looking at some markets here in the pre-market session. So, looking over here at the currencies, we've had a little bit of volatility, to say the least, in the markets here, especially the foreign currencies against the U.S. dollar. You can see the March Aussie dollar has had a strong reversal from the December 27th lows. British pound had a huge move, around 3.5% to the upside yesterday, based on news coming out of Britain. The Prime Minister had mentioned that they will be looking at a hard exit out of the Eurozone, which boosted the pound. Have a very strong bullish reversal bar here, closing near the highs yesterday. Going to probably stay out of this market as well as the rest of the currencies, other than our short U.S. dollar position. So all of these currencies against the U.S. dollar are showing strength is favorable for our position in the U.S. dollar, which triggered earlier this week. March Canadian dollar also showing signs of strength. The euro also strong, not as strong, not quite as the British pound, but showing signs. We're looking to maybe capture some type of bottom here. It's just a little too messy for us. These wide range bars, a little volatile, so the risk reward was not as favorable for us, so we stayed away because we're also paying attention to the dollar index. The yen is a trade that I hated to have missed. Just did not come low enough for us to get in. We did come down, see a nice rounded bottom here, and has kind of traded perfectly to the upside. We are trading now into the 50-day mark, our 50-day average here. So we'll kind of see what's next. Looks like we could be in for a slight downturn, but with the volatility and the unexpected outcome of the presidential inauguration on the 20th, we could see some more volatility in the currencies, and that includes the Japanese yen. So moving over to the U.S. dollar, you can see here we've had a couple of opportunities to get short here. We did break below the number 2 low here on last Thursday, but it did not close below. We did get a slight close below on Friday the 13th, which could have been an entry. We also had an opportunity to get in on yesterday's. The markets were closed. The U.S. equity markets were closed Monday for MLK, as were a handful of the futures markets or in limited sessions. Today, right now, as of this recording, we're trading slightly higher in the dollar at 100.81. So we've made about a halfway back retracement to this bar here, right around this area. So I still think this trade has opportunity to the downside. If you look over at this seasonality chart here, you can see that it's not as bullish. It's more kind of sideways action. So to me, selling out of the money call spreads on UUP or buying in the money puts on UUP could fare well, or doing something similar in the U.S. dollar index options. Looking at, I have an overlay here on gold. That's the next market I want to touch. We could be at some interesting crossroads in gold. I know a lot of people are talking about being long the metals. We had been watching Feb Gold just for our purposes. I moved over to the June contract. I will be moving out further in several different commodity markets just to give us some more time. But you can see, kind of similar to the yen and also to the bonds, we've had this turning point here and gone straight up. Really didn't give us a chance to get long, at least in my opinion. But just kind of a turn, a slow turning Volkswagen here to the upside. The point that I mentioned here, we are at the 50% retracement level. So we need to clear the 1223, 1225 area, in my opinion, before we go higher. So if we can get some closes above the 50%, we might get a chance to get long, especially if we come back down here and retest this trend line. Now, if we don't hold these levels, we could roll back over for further weakness. Seasonally, we point higher. How does this work in relation to our position in the U.S. dollar index? Well, that's what we were looking at. So as we thought, we were trading inversely correlated to the U.S. dollar index. So we've got UUP looking to roll over, trading down. We've got gold trading higher, pretty strong seasonally. You can look here. This is what we did. Here is what we did last year, and here's 2015. Here's 2012, 2009, 2011, 2010, and 2013, and then lastly 2014. So I do like this trade here. Probably going to stay on the sidelines for gold for now, as well as the equities, just until we can get through the inauguration. I think that we could see some volatility, and I prefer to stay on the sidelines. We will keep and hold our dollar position, and once the dust settles on where we want to go for the metals markets, the equity markets, and or the indices, as well as some of the currency markets, we'll look to jump back in. That's all we have for today, and we'll see you next time.